President asking the Fed to cut rates is strictly performative. Last time they cut rates lower, Treasury interest rates went higher. Not supposed to happen. That only happens when the market doesn't believe the fiscal policy. That's what happened the last time. That's what might happen if they cut the rate down. Here's what we got right now. Green line is the Fed rate. The blue line is 2-year Treasuries. Purple is 10-year Treasuries. This yellow is 30-year Treasuries. We look at the meeting, Fed funds meeting. We look at the FOMC meeting, September 18th, up until the election. They cut 50 basis points, right? 10-year goes up 60 basis points. 2-year goes up 62 basis points. This is not supposed to happen. This is what happens when the market doesn't believe that you're doing the correct fiscal policy. You can't cut when there's economic strength. All the foreign countries have no confidence in the U.S. They puke out the bonds. They sell them and all the rates go up. If we look even beyond the election, I mean, this stuff was priced in before the election even came in, but if you look beyond, 10-year rates up 109 basis points. So obviously this is the exception, not the rule. Normally when they cut rates, Treasury yields drop every time, back to the 80s. 2024 broke that pattern because they cut rates and then the market was too strong for a cut. The Fed was wrong, is what everyone is saying who own Treasuries. They puked them out. Things were different in 2024 versus now. 2024, inflation was under control. Inflation was 2.4 and they cut and people still puked bonds. Right now, inflation is 3.5. In 2024, the job market was stronger and the growth kept surprising to the upside, versus now the employment data is weaker. This was the first time they cut after a hiking cycle. So this is interesting. And what happens the first time they cut right now? Unlikely they're going to cut. If anything, they need to hike. And the president abusing the Fed is basically just him placing the blame on the Fed for high interest rates, even though the president knows they need to go higher. So he's telling Powell, he's telling Warsh, cut the rates, cut the rates. I'm sure the president knows if he cuts the rates, Treasury yields are going to go higher and not lower, but he doesn't want to take that accountability for himself. So he's going to tell the Fed it's their fault. And when the rates go higher, he's going to blame the Fed. And if something happens that the inflation drops, or there's some equity correction and they can cut, then Trump can take credit that they cut. Well, what do you guys think? Not financial advice, educational use only.